Clearly, the Fed is not beating inflation yet, but they are winning the war against an overheated housing market. Today, some new numbers showing mortgage demand slowing yet again. Mortgage applications decreased 2% from the prior week. That's according to the Mortgage Bankers Association. These higher rates now at 6.81% on the 30-year, the highest since 2006, really took a hit on demand for refis, though, down 86% from the same week last year. Question now, is there any good news amidst all this housing carnage? It's a glimmer. Some deals can be had. Realtor.com out with the 10 cities where prices are falling the fastest, and topping that list, Austin, Texas, where, listen to this, prices are down 10+% since June. Phoenix, Arizona, just behind them at 9.9%. Palm Bay, Florida, Charleston, South Carolina, Ogden, Utah, they round out the top 5. Denver, Stockton, California, Durham, North Carolina, Spokane, Washington, also in the top 10. You might think those are the 10 cities where prices grew the fastest in the pandemic. That's not necessarily the case, Seana. There certainly is some overlap, notably Phoenix, Austin, and Denver, but most of those cities were in Florida, where prices are not falling that fast because we're still flocking to the tax rate. Look at Ken Griffin's Citadel. They're calling it Wall Street, South Beach. A lot of people still keeping those prices high.
Yeah, there certainly is a lot of demand in Florida. We talk about this cooling housing market, and it's very important to point out, even though Wall Street has been lowering their expectations, for example, Morgan Stanley saying that home prices are going to drop between now and the end of 2023 by about 7%. That puts us right back to where we were at the start of this year, January 2022, when prices were still very elevated, historically speaking. So we are starting to see a slowdown. Demand is starting to fall off a bit. A lot of that has to do with the higher mortgage rates that you were just referencing. But it's important to point out, Rachelle, that on a pricing basis, we are still very elevated when you compare it to what we were seeing pre-pandemic.
Yeah, and as Dave was mentioning there, it is a regional issue. Obviously, a lot of the places that we saw that were really thriving during the pandemic as people wanted to be warmer, and, we also had people working from home, wanted some options. It's interesting, though, because different parts of Florida are sort of coming back at different paces. And then when you also look at some of these other big bank predictions, you mentioned Morgan Stanley, also Goldman Sachs saying that they expect home prices to fall between 5 and 10% next year. Wells Fargo putting it at about just over 5% as well. But then when you look at Zillow, they're actually expecting prices to go up. Now, I'm sure they're hoping that's the case, given that that's the business that they're in. But the big banks are expecting some cooling in the market. And so if you're a first-time home buyer or got stuck in a very expensive rental, at least perhaps some good news, but you're going to have to wait about a year for it.
Yeah, look, people think we've got a lot further to fall. Mortgage rates will climb above 7%. We could be looking at 2020, early 21 type of home prices. So you're going to take a further hit in what you have into your house right now. The interesting part we talked about mortgage demand dropping off 2% from the week prior. It's picking up on adjustable rate mortgages, people taking a bit of a risk on those 5-year fixed. After that, you're subject to market rates. And that we are seeing quite a big demand, people betting on rates down the road. I think in this environment, probably worth the chance for a lot of homeowners.
Yeah, and we talk about the slowdown that we're seeing in the U.S. Obviously, this is also true on a global scale. And it's interesting, UBS was also out with a recent report highlighting what they're calling the riskiest cities for real estate. So Toronto actually topped that list. Frankfurt, those were the top 2. Miami was the only U.S. city in that top 10 list at number 10, which I found a little bit interesting, right?
Risky. Not buying it. Miami will stay hot. They might lose a few percentage points, but we are flocking to the no state income tax. They're going to be fine.
Certainly is a lot of demand, at least for right now.